you are waiting. हाँ ज्वाइन हो गया. हाँ.
Good afternoon. We will start the session. Before I start the session, I will request all to fill the Google form for CP attendance and also mention your name and membership number in chat box. Good afternoon all. I myself ICMAI-WIRC Kulkarni along with ICMAI Ashish Bhavsar welcome you all for the series of webinar on income tax. Today our third session of the series. And today's topic is income from house property. Our speaker for the series on income tax is ICMAI Dakshit Chokshi sir. I will not take much more time. I will request now Chokshi sir to start the session.
Very good afternoon, friends. Chairman Sri Sriram, Vice Chairman Sri Vinayak Kulkarni, Secretary CMA Ashish Bhavsar, Treasurer CMA Chaitanya, and Chairman Direct Tax Committee Dr. Ashish Thatte, and all my professional friends. Is my screen visible now? Hello? Hello?
Yes, sir.
Yes, sir.
Fine, thank you. So today we are going to discuss on income from house property. So when we think of the word income, there are two major sources of income. And another is self-employment, that is business or profession. The Income Tax Act provides a chapter on these two sources of income. And in the first two lectures of this series, we have studied both these chapters, that is income from salaries and income from business and profession. We find a chapter on income from house property sandwiched between these two chapters in the Income Tax Act. The house property is treated as an earning member by the Income Tax Department, and income tax is being charged whether there is a real income from house property or considering the notional income. The house property can be in the different form. It might be self-occupied or it might be given on rent. It might have been given on rent. It might be used for personal purposes or it might be used for business or profession. It might be in the form of fixed assets or it might be in the form of current assets, that is stock in trade. One might not be the real owner of the house property, and in spite of that, it might be taxed in his hand, considering him as the deemed owner. It might be owned singly, or it might be owned jointly with others. The question comes how the value of this property is to be computed. Friends, the chapter appears to be little simple, but there are quite number of complexities, number of issues involved. We may find contradictory judgments on certain issues. We may find that certain issues are still not resolved or still not clear, and we might have to wait for the appropriate court authority to have the final outcome. In this session, we'll study the academic ones, and along with the academic issues, we'll also see the various judgments. So with this background, we start the session. As we know, there are 5 sections under the income in this chapter, income from house property. Section 22 speaks of chargeability. Section 23 speaks of determination of annual value. Section 24 speaks of the deductions, that what are the deductions which are available while computing income under this head. Section 25 speaks of amounts not deductible and special provisions for areas of rent. Section 26 speaks of property owned by the co-owners, and Section 27 speaks of definition of owner, annual charges, etc. So I think there is some noise. I would request everyone to please keep the your laptop or mobile on the mute mode, please. So with this background, let's first understand the chargeability. For any income to attract the chargeability under this head, there are 3 factors which should get satisfied. One is property must be any buildings or land appertaining thereto. Second is one should be the owner of the property. And the third factor is the property should not be used for business or profession. So these are the main 3 characteristics which one should satisfy for chargeability of income under this head. So let's first understand what is building or land appertaining thereto. So building, when we talk of house, building does not include only residential building, but it also includes factory buildings, offices, shops, godowns, and other commercial premises. When we talk of land has to be connected with the building. If it is a vacant land, then such a vacant land will not be taxed under this head, under the head income from house property, but it will be taxed under the head income from business or profession or income from other sources, as the case may be. So renting of a shop or godowns being the building, the rental income will be chargeable under this head. The second criteria is owner of the property. So who is the owner? Owner is the person who is entitled to receive income from the property in his own right. Now this is very important because there is a distinction between the legal owner and the person who is the real beneficiary owner. So here it speaks of owner is the person who is entitled to receive income. So the requirement of registration of the sale deed is not warranted. The ownership also includes deemed ownership. The Income Tax Act makes special provisions for the deemed ownership, that under which factors the owner, who may not be the real owner, but in spite of that, he would be deemed as the owner of the property. We'll see that in the next few slides. Then rental income received by a tenant from subletting. Subletting cannot be charged under this head. If somebody has occupying the property as a tenant and then he further sublet it, then such subletting does not fall under this head, because when he is subletting the property, he is not the owner of the building. Now the question comes, Mr. A owns the building, but is not the owner of the land upon which the building stands. The question is whether the income will fall under the income from house property. The answer is yes. It's not necessary that the land should also be owned by the person. If he owns the building, then the income from such building would be covered under this head. So when we speak of the owner, we say that ownership is a must, but there are certain exceptions in which case even the person is not the owner, is neither the owner nor the deemed owner. In spite of that, the income earned by him is taxed under this head. So what are the such circumstances? We'll see in future slides, but it is the receipt of arrears of rent.
तो बनती
Haji? So when someone receives the past arrears of the rent, then it will be taxed under this head. It's not necessary that when is receiving such past arrears of the rent, whether at that time is the owner of the property or not. So let's see some judgments. In CIT versus Podar Cement, the question comes about the real ownership. So under common law, owner means a person who has got valid title, generally conveyed to him after complying with the requirements of law, such as Transfer of Property Act, Registration Act, etc. But in the context of Section 22, that is the under this head, having regard to the ground realities and further having regard to the object of the Income Tax Act, namely to tax the real owner, the beneficial owner. Owner is a person who is entitled to receive income from the property. Opined that the requirement of registration of the sale deed in the context of Section 22 is not warranted. Let's see certain other judgments also. In the case of Radio Components and Transistors Company Limited versus ITO, SSC company acquired on lease office premises. Lease period was for 10 years with option for further renewal. So here SSC let out the said premises for a rent. So here he gave subletting premises for a rent for a further period of 5 years with the option of renewal. So we said that in the previous slide that subletting does not fall under this head because he is not the real owner. But here the exception was taken. Here he was deemed to be the owner because since the SSC was in possession of property with full transferable rights and had been receiving rent from subtenant in his own capacity being the owner of the property, SSC was deemed owner under these sections. So in another case, that is Tushar Pravindra Shah versus DIT versus Deputy CIT Central Circle Baroda, tenancy was unregistered and on a month-to-month basis. So here tenancy agreement was being made on a month-to-month basis. So here it was said that provision of Section 27(2)(b) will not apply and SSC could not be treated as deemed owner of the property. In another case, CIT versus Kashi Ram Gopal agencies, here the contribution of capital by the partners in the form of land. So land was contributed by the partners. However, there was no document evidencing registration of transfer by the partners in favor of the partnership. So here it was deemed that it is merely a guise and the actual transaction was found not to be genuine. And it was treated that land does not become property of the firm and house property income will be assessed in the hands of the partners. So here the department took the view that the transactions of transfer is not a genuine, but it is just a guise to avoid the taxation. So with this, let's see deemed owner. So in certain cases, even if you are not the owner, the income tax department treats you as the deemed owner. One case is transferred to a spouse. If any house property is transferred to a spouse, otherwise than for adequate consideration, then in such cases, transferor is deemed as owner of the property. Similarly, if it is a transfer to a minor child, then also the transferor is deemed as owner of the property. So in both these cases, the transfer to a spouse or a minor child without adequate considerations is not treated as the real transfer, and the transferor would be continued to be considered as the owner. Now the question comes, instead of transferring the property to a spouse, cash is transferred to the spouse or minor child, and the spouse or the minor child then acquires property out of such case. So what will be the scenario? Whether the transferor will be treated as owner of such property, whether the provisions of deemed owner would be applicable. The answer here is no. If cash is transferred to the spouse or minor child, and out of such case, the spouse or minor child acquires the property, then provisions of the deemed ownership would not be applicable. And in such a case, spouse or minor child, as the case may be, would be treated as the owner. However, one has to keep in mind that clubbing provisions would get attracted. So he may not be treated as the owner, but the respective clubbing provisions would get attracted. Another thing about deemed ownership, holder of impartiable estate is deemed as the owner of the property comprised in the asset. So when there is an estate, an asset, where partition is not possible, then in such a case, whoever is the holder of such impartible estate will be deemed as the owner of the property. Then a member of a cooperative society, company, or AOP to whom a building is allotted or leased under the house building scheme of the society, company, or association is treated as a deemed owner. Another important factor is Transfer of Property Act. A person acquiring property by satisfying the conditions of Section 53A of Transfer of Property Act will be treated as the deemed owner, although he may not be the registered owner, subject to satisfaction of these conditions. That is, there must be an agreement, written agreement. The purchase condition is paid or the purchaser is willing to pay it, and the property is in the possession of the purchaser. So if these three conditions are satisfied, then irrespective of whether the registration has been done or not, the person who is in the possession of the property would be deemed as the owner of the house property. The third important factor is, first we see that so that the property should be either building or land appurtenant thereto. The second was about the ownership, and third is about the usage. If the property should have been used only for the personal purposes, if it is used for the purpose of business or profession, then the income does not fall under this head. The Supreme Court ruling in the matter of Rayana Corporation is very important. An SSE was in the business of letting out of the properties. The SSE was owning multiple properties, and it was his business to let out such properties and to earn his livelihood from the lease rental receipts. So in such a case, it was finalized that it was concluded by the Supreme Court that rental income in such case will become income from business and it will not be treated under income from house property. Another important case is that of Roma Builders. Here, SSC company was engaged in the business of construction and development of residential and commercial units. It had given some commercial units on lease, received rent therefrom. SSC claimed that leasing of residential commercial units was also commercial utilization of immovable property, and hence income derived therefrom was to be assessed as income from business. Here, contradicted decision was given because the facts were different. Here, SSC failed to prove that lease rent received by it was from the exploitation of property by way of complex commercial activities. Therefore, income was assessed under the head income from house property. So these are two different judgments on letting. Both are case fact specific. In the first case, SSC could prove that he was in the business of letting out of properties. There was commercial exploitation of the properties by him. Whereas in the second case, that factor was missing. And in the second case, the income was assessed under the head income from house property. Another case is Assistant Commissioner versus TR and Welding Products. Here, there was no manufacturing activity and all its machineries were sold off. And on the other hand, the lease of land and building was only continuing. So the lease rental was clearly from the exploitation of property, which was neither a complex commercial activity nor a lease of property along with machinery, furniture, and fittings. Therefore, such lease income had to be assessed under the income from house property. Further, the SSC was not carrying on any business during the relevant previous year. Therefore, it's claimed that carry forward business losses ought to have been considered for set off against lease rentals was also not accepted. So here, the facts were completely different. Here, the land and building was given on lease, but when it was given on lease, the manufacturing activity were completely stopped. There were no machineries also, all the machineries were sold off. So what was lying was merely land and building. So as it was merely case of lease of land and building, it was held that income, lease income would be assessed under income from house property. Now let's see composite rent. Rent can be simple rent when a mere building is given on lease. It's a question of simple lease rent, simple building rent. And a building can also be given on lease along with other assets and other facilities. The question comes, so when any property is given on lease or on rental and there are certain other assets or certain facilities which are attached to such buildings, then how the calculations of the income would be done? So such cases are called composite rent. There can be two instances. One instance should be where the lighting of building and that of other assets are inseparable, and other scenario could be where such lighting is separatable. So when the lighting of building and other assets are inseparable, the income would be charged under the head profits and gains of business or profession or income from other sources and not under the head income from house property. Let's see lease of a cinema theater. Now here,
Canada, Halifax.
hello. Can you please mute? Let's see the case of a cinema theater. Cinema theater, there cannot be merely a building because merely building, letting of building does not make it a cinema theater. So there are a lot of other assets attached to that building and it is not separatable. So such case will not fall under the head income from house property. It would be considered either under the head profits and gains of business and profession or income from other sources as the case may be. However, where it is possible to separate the letting of building and other assets, then in such cases, rent of building will be charged under the head income from house property and rent of other assets will be charged under the head profits and gains of business or income from other sources as the case may be. Now let's see that instead of certain other assets, it is a case of composite rent where a building is given along with the provision of services. Like in the building, there are provisions of lift, watchman, water supply, etc. So in case of letting of building along with provision of such services, the composite rent, it needs to be bifurcated. The sum attributable to the use of the property will be charged under the head income from house property and charges for various services would be profits and gains or income from other sources. So to make it simple, where separation is possible, it will be taxed under a respective head, either income from house property or income from business or profession or other sources, the case may be. If it is not separatable, the entire income will not be considered under this head, under the income from house property. It will be either income from business or other sources. Now, what happens if a house property is situated outside India and the SSC earns the income? So in case of a person who is a resident in India, such income would be taxable, whether such income is brought into India or not. So if an SSC has any property which is situated outside India and the income is earned, then he would be taxed on such income, even if such income is not brought to India. So is, as a resident, is taxed on his global income. Whereas for a case of non-resident or resident but not already resident, such income would be taxable only if it is received in India. So now let's understand the important factor of determination of annual value. How the income would be computed from the house property. What is the basis? How the annual value is determined? So first, gross annual value is determined. We'll see what is gross annual value. From such gross annual value, municipal taxes paid by the owner is deducted and net annual value is arrived at. Municipal taxes paid. So there has to be actual payment. The payment has to be by the owner. If it is paid by the tenant, then it is not deductible. Or it is paid by someone else, then it is also not deductible. So let's understand there can be different scenarios. There can be different types of house properties and the calculation of annual value would differ. There are different provisions under the Income Tax Act which determines the annual value for different types of house properties. So what could be such house properties? One scenario could be that property is let out throughout the year Another could be where it could not be let out throughout the year. It is let out only for part of the year, and part of the year it is vacant. Third scenario can be either it can be self-occupied property or it could be unoccupied property. Another could be where a house property is let out for part of the year and self-occupied for balance part of the year. In certain circumstances, it is deemed to be let out property. Next is if it is house property, which is held as stock in trade as a current assets. And next scenario is a house property of which only a portion is let out and another portion is self-occupied. That could be a bungalow and someone has let out the back portion of that bungalow and he's residing in the front portion. Then it would fall under such category where only portion is let out and portion is self-occupied. So there are different provisions to determine the annual value, and determination of annual value is important because that is on which the income tax gets impacted. So we'll study these 7 scenarios one by one. So first scenario is where the property is let out throughout the year. For the entire year, the property is given on rent and the SSE has earned rental income. So expected rent would be calculated. First, we need to calculate the expected rent. Then we need to see the actual rent received or receivable. Higher of these two, we have to determine. So higher of expected rent or actual rent received or receivable. So now what is expected rent? Expected rent is either fair rent. The question comes, what is fair rent then? So fair rent is the rent which similar property in the same locality would fetch. So one has to first arrive at a fair rent, then we have to arrive at the municipal value. Higher of these two is to be considered, but then it would be restricted to the standard rent. If higher of fair rent and municipal value and the standard rent is lower, then such standard rent would be has to be considered. So out of this, so first we have to arrive at fair rent, then we have to see municipal value, we have to see what is the higher of these two, then we have to see standard rent. If standard rent is higher, then higher of these two. If standard rent is lower, then we need to see the standard rent, and then expected rent or actual rent received, whatever is the higher. So this is how we'll see later on by way of example that how this calculation is done. Second scenario is where the property is let out and is vacant for the whole or part of the year. So here, if actual rent is lower than the expected rent, then gross annual value will get restricted to such actual rent received or receivable. So here, indirectly, the benefit of vacancy is allowed to the SSE and the gross annual value is restricted to the actual rent received or receivable. Now let's see these sections in little bit detail. So section 23 provides that where the property or any part of the property is lent and was vacant during the whole or any part of the previous year, and owing to such vacancy, the actual rent received or received by the owner in respect thereof is less than the sum referred to in clause A, then the amount so received or receivable shall be the annual value. So here also we can find contradictory judgments. There are judgments which says that the benefit of vacancy would be available to the SSE. Another judgment says that if the property is vacant throughout the year, then this benefit may not be available. We'll see that section, that judgment also in the next slide. So here, in the case of Vivek Jain, the court held that here in this case, the property was vacant throughout the year. So the High Court, this is very important to understand, that High Court held that to attract section 23(1)(c), the following requirement must be fulfilled. That is, the property or any part thereof must be let, and it should have been vacant during the whole or any part of the year, and owing to such vacancy, the actual rent received or received by the owner should be less. So here the emphasis was on the first point, that is, the property must be let. The High Court held that it is only if these three conditions are satisfied, then clause C of section would apply, even in which even the amount received or receivable in terms of section shall be deemed to the annual value. So here the High Court says that this section does not apply to situations where the property has either not been let out at all during the previous year, or even if so, the High Court made distinction here. The High Court held that the words where the property is let cannot be read as where the property is intended to be let. The High Court held that the contention that if the owner had let out the property even for a day, it would acquire the status of let out property for the entire life, even without any intention to let it out in the relevant year, is also not tenable. So High Court observed that the period for which a let out property may remain vacant cannot exceed the period for which the property has been let out. So here the High Court was of the view that to attract these exemptions, it's not necessary that property was not let out at all. It's necessary that property must be let out, and the let out period cannot be lower than the vacant period. Cannot be higher. The let out period has to be more than the vacant period. So here this is a contradictory judgment, but there are different favorable judgment also, which says that even if the property is vacant during the whole year, the exemption is available. So third scenario is self-occupied property or unoccupied property. Unoccupied property refers to a property which cannot be occupied by the owner by reason of his employment, business, or profession at a different place, and he resides at such other place in a building not belonging to him. So here a person might be owning a residential unit, but his business or professions compels him to reside in a different area, different city, and he might not be in a position to occupy his residential property. So in such a case, even if it is unoccupied property or where the property is self-occupied, hello. So where the property is self-occupied for own residence or unoccupied, its annual value will be nil, provided no other benefit is derived by the owner. The benefit of nil annual value is available only for up to 2 self-occupied or unoccupied house. So when the annual value is treated as nil, reduction for municipal taxes is not allowed, and the annual value up to 2 self-occupied or unoccupied property will be considered as the nil. The third scenario is where a house property is let out for part of the year and self-occupied for balance part of the year. So here the expected rent for the whole year will be considered for calculating the GAV. So even if the property is let out only for the part of the year, the expected rent for the whole year is considered, and expected rent for the whole year versus actual rent received, higher of the two is considered as the annual value. So here it is a very disadvantageous situation to the SSE. Even if he has not let out his house property for the whole year, the expected rent would be considered for the whole year, and higher of such expected rent or actual rent received by him, higher of these two is assessed as his value. Next is deemed to be let out property. So if an SSE has more than two properties, then any two properties is assessed as self-occupied. So here the SSE has a choice to decide or to select which of these two properties will be considered by him as self-occupied. So any two properties at the discretion of the SSE will be considered as the self-occupied, and remaining property will be deemed to be let out property. So in the case of deemed let out property, gross annual value will be the estimated rent, and municipal taxes actually paid will be deducted. Now an SSE has got three properties A, B, and C. In the first year, he decided that A and B would be considered as the self-occupied property, and the benefit of value would be claimed by him. Would be claimed by him for property A and B. Now in the next year, he wants to change this. Now he decides that instead of A and B, he would like to consider A and C as the self-occupied. Then he has got the right to change such an option. So whenever he feels that annual value of any property is higher, he can consider that property as the self-occupied, and he can change the option year after year. Next scenario is property held as stock in trade. So when the property is held held as stock in trade, property consisting of any building may be held as stock in trade, and the whole or any part of the property may not be let out or sold out during the whole. In such case, annual value of property should be nil. So there are also very contradictory judgments available, which we'll see later on, that if any housing property is held as stock in trade, this would mostly happen in the case of the builders. So it says that the benefit of nil annual value is available only for the period up to 2 years from the end of the financial year in which certificate of completion is obtained. So when completion certificate, or we call building use permission or whatever is obtained, is received, and from that financial year 2 years would be considered, and after 2 years the annual value of such property would not be considered as nil. So the benefit of nil annual value would not be available after expiry of 2 years from the end of the financial year in which such certificate of completion is obtained. So what happens after 2 years? So income has to be computed on a notional basis by taking the expected rent as the GAV after 2 years. So we'll see there are also some contract judgments, but my view is that as the provision stands very clear, after the end of 2 years, if any property is still appearing as stock in trade, has not been sold out, then this section 23(5) may trigger and it might be subjected to the income under this head. The next option is in case of a house property where only a portion is let out and portion is self-occupied. So portion of a property which is let out, so the portion which is let out will be considered as a let out property. That would be taxed under the head income from house property, and portion which is self-occupied will be considered as the self-occupied property. Now what happens that is given on a considered basis, it needs to be bifurcated on a reasonable basis between the let out portions and between the self-occupied portions. Same things happen about the municipal valuation or fair rent or standard rent. If it is not available separately, then it needs to be apportioned between the let out portions and self-occupied portions on some certain basis, certain parameters. So the question is now of unrealized rent, the rent which is not realized. The provision says that actual rent received or receivable should not include any amount of rent which is not capable of being realized. So here the distinction is the rent which is not received and the rent which is not capable of being realized. So we need to understand the distinction between the two. To fall under the category not capable of being realized, there are 4 parameters which need to be satisfied. So benefit of unrealized rent would be available only if these 4 conditions are satisfied and it is concluded that yes, the rent is not capable of being realized. One is the tenancy is bona fide. Second is the defaulting tenant has vacated the property, or if he has not vacated the property, definite steps have been taken to compel him to vacate the property. Then the defaulting tenant should not be in occupation of any other property of the SSE. If he is defaulting on property A and the SSE is also owning property B, which is also given on lease rent to that tenant only, then this benefit would not be available. And the fourth and the most important parameter is the SSE should have taken all reasonable steps to institute legal proceedings for the recovery of the unpaid rent, or he should be in a position to satisfy the assessing officer that legal proceedings would be useless. Sometimes in legal science we say that spending good money behind the bad money. So these 4 conditions should prove the genuineness that yes, it's not only on paper but in reality also the actual rent is not capable of being realized, and then the benefit of unrealized rent would be available. Now the question is of property and municipal taxes. This municipal taxes reduction is allowed only on the basis of actual payment. Even if the SSC has accounting method on actual basis, so which is not relevant, whatever be the accounting method, the deduction is only on the cash basis. Now, if the due payment is made in the subsequent year, then the deduction will be allowed in the subsequent. It's not necessary that payment has to be made in the concerned financial year also. Only if the payment of any year is made by the SSC in the next year, then the benefit of such delayed payment is available in the next year. And in respect of self-occupied or unoccupied property for which nil value is claimed, then deduction of municipal tax paid is not allowable. So once the property is assessed nil, it cannot go negative by considering the payment of municipal taxes. Now, section 24 is important, which speaks of the deductions. So what are the deductions? We have seen that how the value is calculated. Hello. Now we'll see what are the deductions available. Now deductions major are in two parts. One is the standard deduction. Another is interest on borrowed capital. So standard deduction is just flat deduction of 30% of the NAV, irrespective of the actual expenditure incurred. So if it is nil value, then standard deduction is naturally nil because it is NAV of 30%. So flat deduction, irrespective of the actual expenditure, is just like a standard deduction. And another deduction is interest on borrowed capital. So interest on borrowed capital can be for acquisition, construction, repairs, renewal, or reconstructions. Now there is some distinction which we'll see later on between the loans taken for acquisition and construction and loan taken for repairs, renewal, or reconstruction. There are different provisions for these two aspects, which we'll see later in the slides. And if interest is fresh loan is taken to repay the original loan, then also the reductions is available. So somebody has taken housing loan, say from bank X, and he finds that bank Y is offering better terms. So he may switch it or to from X to Y, and then he would be in a position to continue the deductions of interest on acquisition of housing property. Now interest for the pre-construction period. Now an SSC may take the loan. The property is in the construction stage. Now SSC may find that it's a good idea to make an investment in the house property when it is in the construction stage. So when the property becomes ready, he may get a better value. So bank provides the housing loan even during the pre-construction period. So pre-construction period is the period prior to the previous year in which the property construction is completed. So when the interest on housing loan is paid for such pre-construction period, then deduction is not allowed when the payment is made. or during the pre-construction period. Deductions is allowed over a period of 5 years in equal annual installments after completion of the construction. So once the property is under construction and housing loan is obtained, then the reductions would be available once the construction is completed, and it would be spread over 5 equal installments. Now, in the year in which the construction is completed, he can claim the benefit. Now, reduction in respect of self-occupied where annual value is nil. Now, when the annual value is nil, the deduction of municipal tax is not available. The standard deduction is also not available, but the benefit of interest on borrowed capital is available. So with this deduction, the income from house property can become negative. So when the house property is either self-occupied or unoccupied and where the annual value is nil, the SSC will be allowed deduction on account of interest. And when the property is acquired, constructed with capital borrowed, and such acquisition completed within 5 years from the year in which the capital was borrowed, then maximum actual interest payable is upper limit of rupees 2 lakhs. So when the loan or capital or is borrowed for acquisition or construction, then the maximum limit is 2 lakhs. And when the loan is taken for repair, renewal or reconstruction, then the maximum limit is of 30,000 rupees. So these deductions, when the property is let out or deemed let out property, then there is no ceiling. Interest is allowable on accrual basis irrespective of the actual payment. Third important thing is unpaid purchase price can be considered as capital borrowed. Now a borrower makes the payment in installments, and the installment also includes the interest portion. So such interest portion can be considered as the interest. But if there is a payment of interest on unpaid interest, then such interest is not deductible. Now we will see the deductions in a very simple format. So deductions can be in two parts. If it is let out or deemed let out property or self-occupied property. If it is let out or deemed let out property, then standard deduction of 30% is allowed. Interest on borrowed capital is fully allowed. So this makes things very simple. For let out and deemed let out property, straightway standard is of 30%. Interest on borrowed capital, full amount. If it is self-occupied property, then we need to see whether loan is taken for repair, renewal or reconstruction, or whether loan is taken for acquisition or construction. If loan is taken for acquisition or construction, then we need to see the condition is acquisition or construction should be completed within 5 years from the end of the financial year in which the capital was borrowed. So if a loan is taken and construction is not completed within 5 years, then limit of 2 lakhs would not be applicable, then limit would be restricted to only to 30,000 rupees. But if acquisition or construction is completed within 5 years, then maximum amount of rupees 2 lakhs is available. And if loan is for merely repair, renewal, or reconstruction, then the maximum limit is 30,000 rupees only. Now there are another part also, whether loan is taken before April 99 or loan is taken after April 99. But in 2023, I don't think that whether there would be any loan which is outstanding prior to 1499. So, but for academic purpose, if loan is taken before 1499, then the deduction is limited to 30,000. Hope this is clear. Anybody needs any clarification on this? I would recapitulate. Interest on borrowed capital. Property can be either let out or self-occupied. If it is let out, then interest on borrowed capital is fully allowed. If it is self-occupied, then two parts. If it is for repair, renewal, or reconstruction, then limit is 30,000. If it is acquisition or construction, then limit is 2 lakhs rupees, provided acquisition or construction is completed within 5 years from the end of the financial year in which the capital was borrowed or the loan was taken. So loan taken,
Sir,
5 years. Yes.
My first question is whether amount borrowed from relatives and friends can be interest on same can be claimed as a deduction under section 24.
See, it does not say that borrowing has to be from a bank. Or any financial institution. Even private borrowing.
Hello?
Hello?
Hello? हाँ बोलिए.
Yes. The section does not say that, like in the earlier side, I said that unpaid purchase price can also be considered as capital borrowed.
Yes, yes.
So, to my understanding, the Act does not say that borrowing has to be from any bank or financial institution. Suppose
we can claim the interest.
Yes, yes. Suppose another aspect I would say, suppose you have taken a borrowing to purchase a housing loan. Okay, that borrowing is from your internal sources, which is interest free. Okay. Now you take another loan to repay that borrowing which was interest free. Then also deduction is available. Are you getting me?
Yes, yes.
See the loan. Let me go to the previous slide. Now see the last para here. Interest payable on a first loan taken to repay the original raised earlier is also admissible as a deduction. Now you are taking a fresh loan to repay the earlier loan. Sir, can you please keep on mute? Hello. Now see the last para here. See the last para here. Interest payable on a fresh loan taken to repay the original loan raised earlier is also admissible as a deduction. Now take an instance here that original loan which you had taken was an interest-free loan. Now to repay that interest-free loan, you are taking another loan on which interest is applicable. So the question would come whether fresh loan which is taken to repay the earlier interest-free loan, whether deduction is allowable or not. So here also it is held that deduction is allowable. So now let's see realization of unrealized or arrears of rent. So this is taxable when it is received. The assessee did not be the owner of the property. What happens that suppose there is an arrears of rent there is a dispute is going on or court cases is going on, and after 2 or 3 years, such rent is realized. By that time, the SSC has already sold off its property to another person. So he is not the owner when such unrealized or rent is realized. So in this case also, even if he is not the owner, he would be taxable. And he can also claim standard deduction of 30%. So if he's not owning any other property, is not the owner, then also such income would be taxed under this head, income from house property, and it is, as it is a rent receipt, he would be in a position to claim standard deduction also. Now question comes of co-owned property. A property can be either owned single-handedly or it can be co-owned. Now there can be two different scenario. One is such co-owned property is self-occupied or such co-owned property is let out. So if it is a self-occupied property, then the annual value of the property for each co-owner will be considered as a nil. And the most important criteria, most important other point is each co-owner will be entitled to reduction of rupees 2 lakhs on account of interest on borrowed capital. So the upper limit of interest of rupees 2 lakhs will be available separately to each co-owner. And if it is let out property, then the calculation would be like this. Firstly, the income would be calculated as if it is owned by only one owner, and thereafter such income shall be apportioned among each co-owner as per their specific share. So as far as interest on capital borrowed is concerned, this is a big advantage that each co-owner is entitled to have its own reduction of rupees 2 lakhs. That is the maximum limit individually. Now, before we take certain judgments, let's recapitulate what we have studied so far. First, we started with section 22, annual value of any property comprising building or land appurtenant thereto. It cannot be vacant land. SSC should be the owner. Should not be used for the business or profession. And even if it is held as stock in trade, then also section 22 is applicable. Then there are different sections which calculates annual value. Section 23(2), annual value of sold occupied property, which is considered as nil for any two property. The discretion is given to the SSC to select any property, and the SSC has got the option to change the choice of such two properties on a year-to-year basis. Section 23(4), annual value of deemed to be let out property. Here the estimated rent is considered as the GAV. Then section 23(5), which speaks of property held as stock in trade, and it says that the annual value will be nil only up to 2 years from the completion of the construction. Then we saw section 24, that is reductions. Standard deduction of 30%. For let out property, the entire interest is allowed. For self-occupied property, maximum reduction up to rupees 2 lakhs if it is borrowed for acquisition or construction, and maximum of rupees 30,000 if for repair, renovation or reconstruction. Pre-construction interest is allowable in 5 equal installments from the previous year of completion of the construction or acquisition. Now, when the limit of maximum of rupees 2 lakhs is considered, both the current year interest plus such apportion interest is also clubbed. So it's not that ki 2 lakhs limit would be only available for the annual interest and this apportion interest there would be an additional amount. No, the upper cap limit is 2 lakhs for this both the interest combined together. Then section 25A speaks of recovery of unrealized areas of rent, which is taxable on cash basis. Standard deduction of 30% is allowed, and even if he is not the owner, such income is taxed under the head income from house property only. Now, co-owned property can be into either self-occupied or let out. For self-occupied property, annual value will be nil for each co-owner, and interest reduction maximum of rupees 2 lakhs is allowed individually to each co-owner. If it is let out, firstly, income will be calculated. If it is allowed only by one owner, only if it is owned by one owner, and such income will be apportioned among each co-owner as per that share. Then section 27 speaks of deemed ownership. Transfer to a spouse or minor child without adequate consideration. Whole asset, member of a cooperative society, person in possession of a property who is enjoying its beneficial rights, person having a right in the property for a period of not less than 12 years, even if he is not the legal owner, is deemed as the owner of the property. Now, with this, now we'll see certain important judgments. Is the screen visible? Hello?
Your voice is coming, but screen is not visible.
एक second. Fine. Now it's there?
No,
Still
Yes,
not
sir.
there?
it's dark.
Yes, it is
Black.
Haji? Not clearly visible? Hello?
perfectly visible.
So I would like to acknowledge that these judgments I have got sourced through Tax Sutra. So first is about the determination of the annual value. Here, the question of leasing between affiliates at lower rates was there, and the ITAT applies the benchmark of the reasonable rent. So here it was the case that SSC along with the co-owners had leased out a property at a little lower rate, and the AO had assessed the annual value at a higher rate. The basis taken by the assessing officer was that the same property leased out to another tenant was at a higher rate. So ITAT caused the AO section Holdings Act, section 23(1), which provides for computation of annual value of let out property, cannot be applied to the present case as the co-owners themselves were the lessees. So here rejecting ITAT, High Court hold that this argument cannot be accepted. So section 23 does not exempt cases in which buildings have been let out by the owners to firms or companies in which they are interested. So section 23 will be applicable in all cases where annual value has to be estimated on let out properties. So here initially ITAT holds the view that it is as it is leasing, letting out has happened between the companies in which they are interested. Provision of section 23(1) should not be applicable, but then High Court held that it is applicable irrespective of whether it is let out to the self-interested groups or not, and annual value has to be estimated on let out basis. Another important factor judgment is about the interest-free deposit. Now we find contradictory judgments as far as the issue of interest-free deposit is concerned. In this case, the High Court has held that interest-free deposit should not form part of house property income. We'll find different judgments also which says that because sometimes the High Court takes a view that interest-free deposit is taken so that they can reduce the rent amount. So interest-free deposit of a substantially higher amount is taken, and indirectly the rent is fixed at a lower level so that the assessing value is reduced. So here it was a matter of Bombay High Court opposed tribunal view. Revenue can't brush aside municipal valuation here. Like in the High Court valuation for determining fair rent while arriving at annual value of the property let out by the SSC. So in this case, the High Court took the view that notional interest on interest-free deposit will not be added as the house property income. Now we'll see HUF not a fixed entity entitled to self-for property benefits like individual. Here, now we are on the fourth. It is a Gujarat High Court full bench which says that annual value of house property as nil is available to HUF also. So the High Court took the view that relief is not available only to imaginary SSCs entities like partnership, HUF is also a group of individuals, and benefit of need. Now here, earlier we see that the judgment we said that interest-free deposit, notional interest will not be considered as income from house property. Here also, Moni Kumar Sabba, it holds that notional interest on fixed deposit received from tenant need not be added in determining fair rental value of house property. Now here the question of vacancy allowance was considered. Here the High Court, the ITT took the view that vacancy allowance is relevant. So when the property was not let out, the benefit of vacancy allowance was not given. But I think that there are certain positive judgment which takes the view that vacancy allowance, the benefit of vacancy is available even if the property is not let out for the entire year. Here, Vikas Keshav Grudh, there is a positive judgment as far as the SSC is concerned, that no house property income on vacant property actual letting during the year is unnecessary. So Pune ITT accepts SSC's claim for rejects revenues determination of gross ALV at 1.51 lakhs based on actual rent received from same property in early years. This interpretation does not appear consistent with the psychology observations let out and mutual exclusive remains vacant for the hard mutual exclusive in the worst property is let does not refer to actual letting out of property has to be understood in contrast. Does ITT hold that Section 20 is also applicable to property which remained vacant, but where the SSC has intention to let out the same has taken appropriate steps to let out the property. So here the ITT took the view that there has to be intention to let out and the effort should have been made to let out the property. Here in the previous year, the property was on rent and it was lying vacant in the next year. So the court took the view, ITT took the view that even if it is remained vacant, but as the intention to let out to the same, the benefit of Section 23(1)(c) is available. Now here there is a contrary view where Mumbai ITT hold the view that no vacancy is available for a property which is not let out for the entire year. Here also Apurvati Pune ITT disallowed vacancy allowance. So as far as vacancy allowance is concerned, we find contradictory judgment. But my view is that we should be in a position to satisfy the authorities that there were genuine efforts. The property was intended to be let out. It was not that intention to let out was itself missing. And in spite of all the genuine efforts to let out the property, the property could not be let out. And then we should be in a position to claim the benefit. Here is so the Mumbai ITT hold the view that vacancy allowance not available where property not actually let out throughout the year. Now there is a very important judgment rental business, which is about the business income versus income from house property. This is a Supreme Court judgment in the case of Rayala Corporation. We have seen this in our presentation also. Here the Supreme Court took the view that as the SSC is in the business of letting out, it would be taxed under the head income from business. There was a contradictory judgment from Madras High Court. Supreme Court reversed the judgment, ruled in favor of the SSC company, and hold that rental income arising to SSC from leasing property is taxable as business income and not house property income. The Supreme Court ruled that the business of the company is to lease its property and to earn rent, and therefore the income so earned should be treated as business income. Supreme Court accepts SSC reliance on ruling in Chennai Properties, wherein the Apex Court has held that rental income received by the SSC having a business of renting of the property shall be taxed as business income. So here the most important criteria is what is the intention. The property can be let out, and the property can be let out as a business purpose also. So if the SSC has got multiple properties and all the properties is let out, and the main earning or the main intention of the SSC is to earn income from such letting out business, then such income is taxed under the head income from business. Now, in this case, KRM Hotels Private Limited, what was missing was the intention. Right here, SSC letting of property was accessible income, not because here the intention of business was missing. It was a merely let out of the property without any intention of to earn the business income. So it was held that income would be house property. Now we find safe deposit vaults. So safe deposit vaults, income earned through letting of vaults is for business purposes and taxable as business income. So we have got various judgments like Madras High Court, rental income earned by filmmaker by letting out studio is also a business income. Now here, the landlord provided optional payment for other services. So here the services were given in the capacity of contractor for rendering certain services like daily cleaning of property, service agreement for particular part of rent agreement. So it was told that such services would not be taxed under the head income from house property, but it will be held as business income. Similarly, income from fixtures which is let out separately is not income from house property. Now, as we said, the registration of sale deed is not required. Owner means a person who is entitled to receive income from property in his own right. So here it is a Supreme Court judgment in the case of Podar Cement, where it is held that even if the registration of sale deed is missing, the person who is in the ownership, who is the beneficial owner, would be considered as the owner to tax be under the income from house property. So here there's an important judgment about deduction of interest. So if it is interest paid on interest levied by bank because of non-payment of installments is not admissible as deductions. So what is allowed is only the basic interest. If there is a default and any penal interest is charged or any interest on interest is charged, then such interest is not allowable as deduction.
हो शेड्यूल करा ना आणि सगळं
Now there are, I think these are important judgments which we have gone through. Now you want me to make some calculations of the annual value, how the annual, like we in the presentation. Wait a second. Is the screen visible?
No, sir.
एक second. ये क्यों ऐसा होता है? Now in the presentation we had seen there are different methods to determine annual value. You want me to show the examples, calculations, or you forgot any other questions, we can take this. Or if you want me to show the calculations of each of these options, then we can study those calculations also. You want, I think that as majority audience is the members, they would be knowing the calculations. So I have not included the calculations in my presentations because the calculations is just a method of simplicity. But if you want me to make you understand about the calculations also, then we can go through the calculations for each of these types. Or if you have got any other questions, we can take up the questions. See, like these are certain illustrations. My screen is visible? Hello? Hello?
Yes.
The illustration is visible?
Yes, sir.
Okay, now see, I have got certain illustrations which shows how the computation is done. Like there are 5 house properties, all of which are let out. Now we have to compute the GAV. So if we see the first scenario, the municipal value is 80,000, fair rent is 90,000. So first we have to see what is the higher of the two, higher of the municipal value and fair rent. So higher of 2 is 90,000. And then we have to see the standard rent. Standard rent here is not applicable. So in this scenario, expected rent, which is 90,000, and actual rent received is 72,000. So higher of expected rent or actual rent received is considered as the annual value. You want me to study these illustrations, or these illustrations are very known and clear to you? Now let's take off example 2, house 2. Here, municipal value is 55, fair rent is 60,000. So higher of 1 and 2, 60,000 is considered. and then it is to be measured with the standard rent. Standard rent is 75,000. So higher of it cannot exceed the standard rent. So expected rent would be 60,000. Actual rent received is 72,000. So here GAV would be 672,000. Now let's take another case where standard rent. Now the expected rent cannot exceed the standard rent. So here the expected rent would be kept limited to the standard rent, which is 58,000. So 58,000 and actual rent received, which is 60,000. So higher of the two would be the GAV. So the idea is, first we have to consider what is the municipal value and fair rent. Then we have to see higher of two. Then higher of 1 and 2 cannot exceed the standard rent. So we need to restrict it to a standard rent, and then it needs to be compared with the actual rent. So here in illustration 2, we have got a property which is situated outside India. So here the gross annual value, we have to see what is the actual rent, then whatever the taxes paid in the foreign country, it's to be deducted, and then net annual value is arrived at. The third illustration, Mr. Manas has got two house properties, one at Bombay and other is Delhi. The property at Delhi is unoccupied. He lives in Chandigarh for his employment purpose. So for acquisition of house at Bombay, he's taken a loan. He has not repaid any amount so far. In respect to house property, Delhi has taken a loan of 5 lakhs. Is compute deductions available. So here, the interest on loan taken would be restricted to rupees 2 lakhs. He has taken a loan of 30,000 at 10% interest. Then interest on loan, which is taken at Delhi, which is restricted to 30,000 rupees. So total interest cannot exceed 2 lakhs. So deduction would be allowed only up to rupees 2 lakhs. So here illustration 4 is about the property where there was unrealized rent. Unrealized rent was rupees 11,000. So here expected rent is 1,20,000. Actual rent received is 1,20,000, 1,21,000. So higher of both the two would be considered as the gross annual. From gross annual value, the deduction towards municipal tax, and then standard deduction and interest on borrowed capital would be allowed. This is also a case where there was unrealized rent. So the ER was 1,80,000, but the actual rent received was 1,80,000. So GAV would be restricted to 1,80,000. And then from that GAV, municipal taxes and deduction, standard deduction and interest on borrowed capital would be deducted. Here it's a case of where the loan was taken during the construction period. So the deduction would be interest paid plus 1/5 of the interest paid during the construction period. So the annual interest is 1,80,000 plus 1/5 of the interest is 72,000. Total comes to 2,52,000. But the maximum deduction allowed is 2 lakhs only. So it would be restricted to only 2 lakhs rupees. So under these circumstances, the SSC has got a loss because interest paid during the construction period is not does not become deductible in full if the maximum amount exceeds rupees 2 lakhs. So here the municipal value is 5 lakhs, fair rent is 4,20,000 and standard rent is 4,80,000. So higher of 5 lakhs and 4,20,000, which is 5 lakhs would be considered, but it needs to be restricted to the standard rent. Standard rent is lower, so it would be restricted to 4,80,000, and then actual rent received is 3,50,000. So GAV would be higher of the two. So 4,80,000, and from this, the payment of municipal taxes and standard deductions and interest on borrowed capital is deducted. So you want me to go through? There are a number of such illustrations. I feel that as majority are the members, they would be aware of such calculations.
Sir,
So you want me
sir,
to
hello, sir.
show all these illustrations? Yeah, please.
In this case, it appears that standard rent is the criteria.
Pardon? Standard?
Rent is the criteria for ascertaining the actual GAV. Or
standard rent is not a criteria. Standard rent, it cannot exceed the standard rent. The question is, let's go to example number 1. See, if standard rent is applicable, then it needs to be restricted to the standard rent. Like here,
yeah,
municipal value and fair value 80,000 and 75,000. So 80,000 is the higher of the two. But if standard rent wherever is applicable is lower than that, then the GAV needs to be expected rent needs to be restricted to the standard rent. And from standard rent, then we need to calculate what is the actual rent received. So if actual rent received or receivable is higher, then that would become the GAV.
Otherwise, standard rent.
Yes.
Okay.
So do you want me to go through all these illustrations? Because these are, I feel that these are of, once we know the main criteria, then the calculation is just a clerical thing or arithmetical things. We just need to understand how the calculation is being done for all these three or all the 7 different sections.
So how to calculate standard rent?
Standard rent is the rent which is as per the given by there are government authorities which provide standard rent in certain cities.
Okay. Only in metropolis.
Adi?
Only in metropolis cities. Metropolitan cities. Metropolis
Yeah,
cities.
Yeah. Yes. Rent Control Act होता है उसमें, लेकिन आई डोंट थिंक वो अभी शायद कहीं पे अवेलेबल है. इट इज फिक्स्ड बाय द रेंट कंट्रोल एक्ट.
Okay.
Now see, this side will make the things clear. First we need to see expected rent. Expected rent, how the expected rent is calculated? It is higher of fair rent and municipal value. So higher of these two, but it would be restricted to the standard rent. If standard rent is lower, then that value is to be considered. If standard rent is higher, then higher of these two would be considered. So it's not that the higher of these three would be considered. Like see here, you see the example number 2, house number 2. Here the municipal value is 55,000, fair rent is 60,000. Okay. So higher of these two is to be considered, which is 60,000. Now standard rent is 72,000. So standard rent is higher than municipal value or fair rent. But then standard rent would not be considered. The higher of municipal value and fair rent would only be considered. We have to just see that standard rent should not be lower than these two. If standard rent is higher than municipal value and fair rent, then we need to ignore the standard rent. Like the calculation is very simple. First, we need to see fair rent and municipal value. Then higher of these two is to be considered. If there is a standard rent, if standard rent is higher, then both fair rent and municipal value, then it needs to be ignored. Only if it is lower, then it needs to be taken into consideration. If standard rent is higher, then we need to ignore it and we need to consider what is higher of fair rent or municipal value. So that would become the expected rent. Then expected rent needs to be calculated with actual rent received or receivable. So is there any other questions?
Sir,
Yeah.
what about composite rent? If I am getting composite rent for premises as well as the other services, just like in business center, the owner of business center provides the space as well as also the administrative services along with it. So since the rent part is composite, so I cannot claim the whole amount, rather the owner cannot consider the whole amount received from the tenants or the occupants of business center as income from house property. There need to be some separation, no?
See, now see, my screen is visible.
Yes.
See, composite rent in case of letting of building along with provision of services. So we already seen this. If in a case letting of building along with provision of services, composite rent will include rent of building and charges for different services also. So in this situation, the composite rent is to be bifurcated. and the sum attributable to the use of property will be taxed under the income from house property, and charges for various services would be charged either under the head profits and business or income from other sources.
But sir, where it is inseparable,
No. See, if it is inseparable,
where
then
the
you just ignore
composite
it.
rent is inseparable.
No. What you are paying along with the building, what other services you are getting?
No, that is, say, suppose that quantum cannot be separated. If it is
I just want to
inclusive of all.
understand. No. I just want to understand what are the other services which you are getting.
Administrative services, just like intercom facility, say some furniture part of it, and other ऐसा इस type का, yeah, secretarial services.
No. See, if it is not, then see, if either there are two parts. Either you ignore it and you consider the entire amount as rent and charge it under the income from house property. Otherwise, on certain parameters, you need to attribute it.
Okay.
Because it is a composite rent. No, the composite rent means composite rent. So that's why in the earlier side also we said there would be two aspects. If it is rent of building, like I gave the example of cinema theater. Under cinema theater, it's not possible to segregate what is the rent for the building, what is the rent for chairs or other facilities. So it will not be under the head income from house property. It would be fall under the head profits and gains or income from other sources, whatever be the case.
Yes.
So if it's separable, then we need to have certain criteria to segregate it. So we need just to apply certain logic for this.
Okay.
So if there are no other further query, can we close the session? Ashish bhai, anybody from the organizer is there? Ashish Paushar? Anybody?
Yes, sir. Myself there. I'm chairman WRC. I'm there.
Sir, just one query.
Yeah,
Ashish bhai?
Just one query is there, sir.
Continue.
I understand there are some changes related to this claiming of interest and principal during the income.
Pardon?
In this current budget, there are some changes, na sir. In this claiming of cost in the calculation of long-term liability of the house and the interest and principal claiming of interest and principal in the income tax return. Hello.
You're talking about income from house property or capital gains?
Yeah. Income tax related to house property. I understand. I have just read that if we are claiming interest and principal in interest from house property and ATC, then we will not be able to claim the cost of this house while calculating the capital gain when we sell this house. I just want to confirm whether this change is there in this budget.
I have a question related to this, sir.
Haji?
Hello.
Yeah.
I have a question. I have two houses. Can have two houses without paying any tax or rent?
आपकी आवाज क्लियर नहीं आ रही है, फिर से बताइए.
अच्छा, मेरे पास दो घर है.
हाँ जी.
मेरे पास दो घर है.
हाँ.
से अगर मैं दोनों घर अगर एक ऑक्युपाइड है और एक वैकेंट है, तो मुझे उसका
हाँ।
टैक्स देने की जरूरत नहीं है।
क्या
Tax on rent-
आपको? सर वॉइस
tax
ब्रेक
on
हो
rent
रहा है।
नहीं है।
हेलो
हेलो,
सर, फिर से बताइए, सॉरी आवाज ब्रेक हुई।
मेरे पास 2 घर है,
राइट।
तो एक में सेल्फ ऑक्युपाइड है और एक वैकेंट है।
हाँ,
तो इसमें अगर मैं उसको रेंट आउट नहीं करता तो मुझे कोई टैक्स देने की जरूरत नहीं है।
नहीं, सी यू कैन हैव 2 हाउस प्रॉपर्टीज एज सेल्फ ऑक्यूपाइड।
यस, हाँ।
यस।
तो लेकिन अगर मुझे लगा
हाँ,
कि मेरा कोई फ्रेंड या कोई आता है और वो रहता है एंड वो अगर कुछ पार्ट ऑफ द ईयर रेंट दे देता है, और
हाँ,
उसको कैसे अंडर रेट से करें या जितना एक्चुअल रेंट मिला है उसके हिसाब से कैलकुलेट करें?
नहीं, सी देखिए, आपकी तो फिर देखिए, आप आपके फ्रेंड हैं, आप कैसे रेंट लेते हैं वो क्वेश्चन रहेगा। आप इफ इट इज शोइंग ऑन पेपर देन इट विल बी कंसीडर्ड एज अ लेट आउट प्रॉपर्टी। सो लेट आउट प्रॉपर्टी के हिसाब से जो भी उसका वैल्यूएशन होगा। इफ इट इज सेल्फ ऑक्यूपाइड प्रॉपर्टी, और if no, देखिए I will just again do, or if it's self-occupied property, the benefit of 2 self-occupied property is available only if no other benefits derived. If you are deriving any benefit, if the property is let out, is given on rent, then rent would be chargeable.
Okay, if it is
It cannot,
let out
annual
for,
value cannot become nil.
it is rent out for the part of the year, and
हाँ,
in and the rest of the year it is vacant, then what will be
right.
happen?
See, where the property is let out for the
Or part
whole
of
or
the
part of the year, my site is visible, my screen
Yes.
is visible.
Yes.
Okay, we also say if actual rent is lower than expected rent, then GAV will be the actual rent received.
So this will be considered for whole year.
No, not the whole year. If actual rent is lower than the expected rent, तो आपको जितना actual rent मिला है, that will be considered as your GAV.
Okay.
Not the whole year. आपको जितना rent मिला, इतना that will be considered as GAV.
He will also get vacancy allowance also, ना sir?
नहीं, ये तो वैकेंसी अलाउंस का क्वेश्चन नहीं ना, उनको तो उनके पास प्रॉपर्टी है। If it is not given on rent, the annual value for both the property is nil.
Yes,
बराबर है।
okay.
अभी उसने ऑफिशियली रेंट पे दिया है, if is collecting the rent, ठीक है, तो जो भी GAV हो,
एक आधी भी प्रॉपर्टी अगर वो for any of the period, for part of the period also, if he let out, in that case it will not be self-occupied property.
Nah.
It will be deemed. It will be deemed let out, and it will be taxed as accordingly, which you are exhibiting right now on the screen.
Yes, but that is what I am saying. Actual rent received, जो भी होगा, that
will be taxable.
If it is expected rent, now you need to calculate what is expected rent, actual rent received. Okay. If actual rent received is lower, then that will be the GAV.
Okay.
इससे पहले का सवाल जो पूछा था, इससे पहले जो सवाल पूछा था,
हाँ,
कैन यू प्लीज अगेन रिपीट इट? जो नए बजट के बारे में जो बोल रहे थे। Kindly mute. Request members to kindly mute their microphone. Hello. What was the earlier question? Is there any query from the members participating members?
Sir, is there any change in the house property law in the budget?
In the current
Any change in the house property?
house property as
Yeah, permanent house property other than capital gain.
only
Any other changes in the act?
नहीं, उसमें तो इतना है कि आपकी जो आपने इंटरेस्ट इतना क्लेम कर लिया है, हेलो,
हाँ बोलिए ना,
that will be deducted from your cost of acquisition. वो तो एसएसबी ईयर 24-25 से बजट का प्रोविजन इसमें मैंने इंक्लूड नहीं किया है कि दैट इज एप्लीकेबल फ्रॉम एसएसबी ईयर 24-25. सो द चेंज वाज कि इफ द कॉस्ट ऑफ द interest which you are claiming under section 24, so that would be reduced from your cost of acquisition.
Okay. What is the earlier, sir?
पहले तो कुछ नहीं होता था, पूरा कॉस्ट ऑफ एक्विजिशन जो ओरिजिनल थी वही गिना जाता था.
अच्छा, so it is a loss actually. Okay.
I think no other queries are there.
Fine. Sure. Thank you, sir.
No, I will thank you, sir. On behalf of Western India Regional Council, I extend my thanks to our today's speaker, Dakshesh Choksi, sir, who has deliberated quite nicely, exhaustively, giving at a length about the section-wise how the income tax is levied under the head income from house property section-wise, and he has also tried to give some good instances for various aspects under the income from house property. Simultaneously, the participation from this the member side has also been very excellent today. Certainly, the change in timing has certainly helped the members to attend it quite nicely, and I hope from next time also such there will be more attendance. Thank you, Choksi sir. Thank you all the participants.
Thank you all participants for your response.
Thank you so
Sir,
much.
next class timing, sir. Next class timing. Next session timing next day.
It will be.
Next session is tomorrow, no?
Today.
Tomorrow timing 4 to 5.
No, it will be.
5 to 7:30 original timings. Original timings only, yeah.
Okay.
Thank you.
Thank you so much.
Thank you.
Thank you, sir.
Thank you.